I am Peter Parsano Jr. from VSB 2D, and this is the continuation of Chapter 10, Compensation Income. Confirmation of tax exemption. Confirmation shall serve as a proof of exemption. Without the confirmation certificate, the employee is taxable. The exemption of Filipino employees is not automatic. Filipino claiming exemption under the terms of international agreement or under provision of special laws granting privileges to international organization shall file an application for confirmation of tax exemption with the BIR International Tax Affairs Division. Employees of the Philippine embassies or consulate offices. It should be recalled that employees working in the Philippines embassies or Philippine consulate offices are not considered non-resident citizens and are therefore subject to Philippine income tax. Benefits required by the nature of or necessary to the trade, business, or conduct of profession of the employer. Benefits or allowances furnished by employer to the employees to enable them to appropriately and effectively execute their duties as required by their employment or exempt from income tax. This referred to as necessity of the employer rule. Here an example: necessary traveling, transportation, representation, CR entertainment expenses that are subject to an accounting or liquidation in accordance with the specific requirements of substantiation of expense. Benefits for the convenience or advantage of the employer. Benefits or allowances which are intended for the furtherance of the interests of the employer business or to ensure its smooth operation or likewise except from the income tax. This is referred to as the convenience of the employer rule. Here is some example. Housing privilege of military officials of the AFP located inside or near the military camps. Composition of taxable compensation income. Number 1 is regular compensation. This pertains to the fixed remuneration received by the employee every payroll period. And the number 2 is supplemental compensation. This pertains to other performance-based pays to employees with or without regard to the payroll period. Regular compensation income. The regular compensation includes fixed remuneration due to be received an employee every period such as number 1 basic salary and number 2 fixed allowances such as cost of living allowance, fixed housing allowance, representation, transportation, and other allowances paid to an employee every payroll period. Non-compensation items for number 1, fees. Retainer fees or consultant, talents, and directors who have no management function in the business are professional income, not compensation income of recipient. And the number 2, commission to non-employees such as independent sales agent or business income to the sales agent. For the last, number 3, tips and gratuities. Tips and gratuities paid directly to an employee by the customer of the employer which are not accounted by the employee. To the employer are not considered as compensation income but are to be reported as other income in the income tax return of the employee. For the illustration 1, so the gross salary is for 100,000. Cost of living allowance is 36,000. Fixed monthly transportation allowance is 2K per month or 2K times 12 is equals to 24. Deduction for withholding tax on compensation is 10,000 and deduction for employee shares in SSS, PhilHealth or HDMF is 32,000. So the taxable compensation income shall be computed as follows. Gross salary is 400,000 and cost of living is 36,000. Fixed monthly transportation is 24,000. So the regular compensation income or the total is 460,000. Less non-taxable compensation, mandatory deduction is 32,000. So the taxable compensation income is 428,000. For illustration 2, an employee who was terminated in 2019 due to business closure of the employer received the following. Unpaid 2019 salary is 200,000. Unpaid 2018 salaries is 20,000. Reimbursement for transportation expenses is 10,000 and termination pay is 100,000. The gross compensation income is 200,000 plus 20,000 plus 100,000 is equals to 320,000. Less non-taxable compensation or non-taxable benefits is 100,000. So the taxable compensation income is 220,000. Supplementary compensation. Supplementary or additional compensation includes performance-based remuneration to an employee in addition to regular compensation with or without regard to the payroll period. The following are the additional compensation under the current tax rules. For the number 1 is overtime, number 2 is hazard pay, number 3 is night shift differential pay, number 4 is holiday pay, number 5 is commissions, number 6 is fees, including director's fees or if directors in an employee. Number 7 is emolument and honoraria. Number 8 is taxable retirement and separation pay. Number 9 is value of living quarters or meals. Number 10 is gains on exercise of stock option. Number 11 is profit sharing and taxable bonuses. Overtime, holiday, hazard, and night differential pay. This constitute additional compensation except when derived by a minimum wage earner. Commission, emoluments, and honoraria. Commissions are incentives intended to stimulate sales. This may be given as a profit sharing or performance bonus. Emoluments pertain to any pay in general, while honoraria are additional payment for attending to special tasks or assignment. Living quarters or meals. If an employee receives free living quarters or meals in addition to salary for services rendered, the value to the employee of such living quarters or meals is included in compensation income. However, when the same was furnished to an employee for the convenience of the employer or out of necessity of the employer's business, the value thereof is not compensation income, but a business expense. Stock option plans. Under various stock option plans, employees are given the privilege to buy shares and an agreed exercise price after meeting stipulated vesting conditions. The option will have value when the stock of the employer increase in the value above and exercise price at exercise date. The value of option is the discount at exercise date. Profit sharing or taxable bonus. Profit sharing is reward for turning the business to post a profit. It is a compensation for controlling all the factors that influence profit, such as marketing and sales, productivity, and administrative factors. It is reward which can be enjoyed by individual employees such as salesman, division head, key officers, or by all employees collectively. Bonuses are supplemental or additional compensation. However, if they are linked solely to productivity under the productivity incentive plan of the employer pursuant to RA 6971, they should be considered as the minimal's benefit. Productivity Incentive Bonus. The Productivity Incentive Act of 1990 RA 6971 encourages private employees to set up productivity incentive programs. Productivity incentive is a link to improvement in productivity, usually in terms of cost savings through waste reduction, efficient labor utilization, or increase in volume of production. Under the NIRC, productivity incentive bonus is considered as a part of other benefits under 13th month pay and other benefits. Under the revision of RA 10653, productivity incentive is now the minimal's benefits. Productivity incentive distinguished from profit sharing bonus. Productivity incentive is charged on improvements in the factors of production and is usually enjoyed collectively by employees due to the inherent difficulty of tracing productivity to individual performance. It is based upon a cost savings, hence it is payable even if the business possesses a loss. Profit sharing is payable only when the business posts a profit. 13-month pay and other benefits. 13-month pay, other benefits, Christmas bonus, cash gift, additional compensation allowance, 14, 14, 14th month pay, other fringe benefits. Christmas bonus of private employees. Cash gift other than Christmas or anniversary gift of private employees are RR2-98 as amended by RR5 2011. Additional compensation allowance or ACA of government personnel RR8 2000. 14-month pay or 15th-month pay. Other fringe benefits of rank and file employees. 13-month pay. The 13-month pay of government employees consists of Christmas bonus equivalent to a 1 month salary plus 5,000 cash gift. The 13-month pay of private employees is equivalent to one month salary. Christmas bonus and Christmas gift. The Christmas bonus of the government employees is the 13th-month pay. In private companies, the term is Christmas bonus may pertain to the 13th-month pay, separate incentive pay, or to a profit sharing. Christmas bonus of private employees, which has a non-performance based incentive pay, is part of other benefits. Christmas bonus in the nature of profit sharing should be treated as additional compensation income, not as other benefits. The nature of the Christmas bonus a private employee shall determine its tax classification. The Christmas gift of government employee is specially designated as part of 13-month pay and the other benefits under Section 32B7EI of the NIRC. RR 5 2011 include Christmas gift in the list of minimal benefits. And that's all. Thank you.